The government shutdown forces the Federal Reserve to make its latest interest rate decision without a key piece of data. Karen Kafa is in Washington with a look at what today's announcement means for your wallet.
Hi, Morgan. The Federal Reserve opting to cut a benchmark interest rate by 1/4 percentage point today. They made that decision with the backing of some government inflation data that released last week, but without key government jobs data.
The Federal Reserve making its latest decision on interest rates without the full picture of how the U.S. economy is faring.
There is no risk-free path for policy as we navigate this tension between our employment and inflation goals. Our framework calls for us to take a balanced approach in promoting both sides of our dual mandate.
The ongoing federal government shutdown has suspended most of the economic data the Fed relies on. That includes the Labor Department's jobs report for September, which should have released October 3rd.
It's not to say that we don't know what's happening with the U.S. economy right now, but we would have a much better idea and a higher degree of confidence if the federal government were operating and releasing the data that we're accustomed to getting.
The Fed can lean on employment data from the private sector as well as its regional banks. And while government inflation data for September did release last Friday, Bankrate's Mark Hamrick says the labor market is really in the Fed's focus.
Inflation is rising at an annual rate of 3%. That's still a long way away from the Fed's 2% target. But the Fed is primarily concerned now about a job market which has essentially frozen.
Justin Wolfers, professor of economics and public policy at the University of Michigan, says the central bank will likely take upcoming rate cuts with caution.
What it's doing right now is actually just taking its foot off that brake and moving us back to neutral. We'll coast for a little while until we can figure out what the next step needs to be.
Meaning, economists say, consumer relief on mortgages, auto loans, and credit card debt will come slowly, too.
And underscoring that slow relief for consumers, Powell told reporters today that the discussion around where the Fed should move next was actually a pretty robust one. So a December rate cut is far from a foregone conclusion, he said. The Fed will have a number of other variables to consider, including tariffs' impact on inflation and also the economic impact of the continued government shutdown. Morgan?
All right, Karen Kafa live in D.C. Karen, thank you so much.